In today's podcast, you're getting a first look at a sponsor with a multi-decade, multi-cycle institutional real estate investment background who is bringing the holy grail of real estate investing to the general public for the first time. Gentleman farmer George Bravante of Bravante Farm Capital directly farms over 5,000 acres in the Central Valley of California and has created a structure for his deals that returns all capital to investors with interest and then goes on to double their money after all risk has been stripped out of the deal, and even then continues to deliver ongoing returns to investors. Hi, I am Adam Gower, and when I first met George, I knew that there was something different about what he was doing. George has identified an area of the Central Valley known as the Oasis, where there is abundant water, a highly fragmented farmland industry well suited to consolidation, and increasing institutional investor interest driving up values. By targeting farms ripe for adding value, and by having a long-term approach, George's deals offer investors not only a pathway through inflation, stock market volatility, and the tough economic times that we are heading into, but also returns projected to outstrip other real estate asset classes you are likely to see. Now, in full disclosure, I am personally investing with George and am employed by Bravante Farm Capital to assist in raising capital and advise on syndication strategy. The value proposition is fascinating, and if you'd like to learn more about it and access a detailed presentation of the opportunity after hearing this podcast, go to the podcast page at gowercrowd.com, where I will include a link for you to sign up to learn more and to get on the wait list for George's next deal. All right, so let's get on with it. I'm delighted to introduce you to my guest today, George R. Bravante Jr. of Bravante Farm Capital. Here he is. George, what a pleasure it is to have you on the podcast. Thanks so much for joining me. I have been absolutely blown away and fascinated by farmland real estate investing over the last few months. You've taught me an enormous amount. Let's start with your background. Who are you? Where do you come from? What's your background?
Okay, Adam, thank you for spending the 2 months with us and learning about the ag space. I'm equally excited about it, as you know. So my background is, I would say it's strange, but it's varied, to say the least. I grew up in New Jersey, and right by New York City, so tri-state area. My dad was a mailman, my mom was a teacher, and my extended family, it turns out, after years of doing genealogy, almost everybody in my history had some aspect of farming in their bailiwick, which I didn't know until I started farming. But anyway, so I guess it's in my blood a little bit, if you believe in that kind of thing. So I went to school in South Carolina. I studied accounting. Graduated and went to work for P. Marwick in Charlotte. Had a good friend and partner still to this day in California. He invited me to come to California to interview with Ernst & Young. And Ernst & Winnie at the time, now Ernst & Young. Loved Newport Beach. Packed my stuff in my car, drove to California. We started a real estate practice, and that culminated in years in the private equity business and the real estate and leveraged buyout space with the Robert M. Bass Group, Colony Capital, Texas Pacific Group entities. When I started having children, I decided I didn't want to do that anymore, be working 24 hours a day, 7 days a week. Started my own business and raising money and private equity. My partners in Newport Beach were old farming people that they segued to real estate. And they had a few broken deals that were still in the ag space. And I had built a small winery in Napa Valley in the early 90s and had a little bit of a love affair with planting wine grapes and making wine. So we were in the ag space a little bit, but I don't really count that agriculture for real because it was a small venture. So anyway, I started working on these broken deals, moved to the Central Valley, bought one deal, then that made money, bought another deal, built a packing house, built a cold storage, got in the table grape business. And then we have our own farming company now. So, I mean, we're fully integrated. We've been doing the buying, managing, farming, selling of citrus, table grapes, pistachios, stone fruit for about 20 years now. And we've gotten fairly good at it. We've raised money in different formats, but we really think that I'd like to bring what we do to smaller, less sophisticated investors to have an opportunity to share in what we do. And that's kind of why we're trying to launch this crowdfunding opportunity.
Right. And you've been very successful, haven't you? Give me a sense of scale. What is your scale today?
We farm about 5,000 acres. We pack and sell about 3 million packages of fresh fruit worldwide. We ship to Southeast Asia, a little bit to Europe, and obviously domestically. We have another 800,000 packages that are packed by others, like in the Mandarin business. We don't pack and ship those. We have Sun Pacific or the Cuties brand that does that for us. They're the best at it, and we make the most money with them. So, we're a little different. If somebody can do it better than us, we outsource what we do to them, and so we can optimize how much money the ranch makes, not how much money you make processing stuff. That's like pennies compared to what you can make owning the ranches when they do well.
Is the so I know I was going to say you are the farmer, right? You don't own land and lease it out to somebody else. That's what you do. You are the farmer.
Yes, I'm not the farmer. I manage the farmers, I guess.
Well, hang on a minute. I've been with you on a tour. You know what you're doing on the farm, right?
No,
you're out there knowing.
Obviously, I know what I'm doing on the farm, but we have an amazing staff of farming people, field people, packing people, sales people. A fairly large organization. Maybe the average person has worked here has been here almost 16 years. We have about a 95% capture rate, and people stay with us forever. We have a really good group, and a real good esprit de corps here. So, but we have other people that help us farm certain commodities that are just maybe it's too far away, or they have a certain expertise. But we basically farm, we do the whole vertical chain on about 90% of what we have.
Right. So. And that's very important. But let's talk about the nub of the issue. What is the Oasis and why is it important? Tell me about the background to that, what it is, what's going on with the Oasis of California.
Oasis is a term that I've coined on an area of 4 water districts, basically. And they encompass what I call the Fresno Plain. So if you go to a map and look at where Fresno is, Fresno's at the base of the Sierra Mountains. And the reason Fresno is there is because it's the best soil, the best kind of microclimate for growing what we do down the South Valley. And the geology of the underground water is amazing, right? Because there's 2 major rivers that flow right through the Fresno Plain. And most people think about rivers on top of the land. There's also underground rivers that run under the land, and it's very concentrated in this area. So the Oasis is roughly 500,000 acres, which sounds like a lot, but there's parts of it that are built up, parts are mountains or hills, so there's probably 300,000 real good acres in this Oasis area, what we call. The water districts there have absolute rights to the water. They've been perfected for 50, 60, 100 years, depending on which one it is. So, in my thinking of being in the valley for 25 years, the further south you go towards Bakersfield, the deeper the water gets and the worse the water gets, because there's more salts and volatile compounds the deeper you go. So where we are in the Oasis area, which is our target, and I've got a few ranches on the boundaries of the Oasis that do pretty well, but we only want to invest in the future deals in things that we know the water is bulletproof. And we know we'll be the last guy standing in California when it's over with. Because in California, they've changed the law. There's now a thing called SGMA, which is Sustainable Groundwater Management Act, which basically gives the state control over, pumping out of the ground into the future. And if you don't have any surface water coming out of these water districts, they're going to curtail, and you're going to lose 40% of the acreage in the South Valley, probably 30%. Everybody argues about how much, but it's more than 20, less than 60, somewhere in that range. So our thesis is, as the rest of the valley dries up, and it's not going to dry up 100%, there's going to be spots where it's good, but this is a real supply and demand business, both for selling commodities and land prices. So as our land gets more, is going to get much more valuable as other land gets less valuable, and what we make every year is going to skyrocket because supply and demand. Like sometimes we'll have a freeze in citrus. I mean, the prices are 2x when that happens. So a $20 box of oranges is $40. So imagine when we, these groves go out of business, basically half of them are fallowed. You're going to see a supply curve that's out of whack that's going to really benefit our investors in the Oasis area. So, and the Oasis is a term that I coined. I mean, it's not, you can't go on a map and see it, but we kind of know what area it is. And the other reason the Oasis is important to me is it's close to where we do business. We're in this market every day. We know the brokers, we know the chemical people, we know the soils people. We understand it. We know how to do the due diligence perfectly on these things. It's not difficult, but you've got to execute with 100% performance to make sure every deal is good for the investors. So
now in the Oasis, tell me about the industry. Describe a kind of classic target acquisition that you're looking for.
I mean, all over California, it's the same, but in this area, there are lots of little farms. 30, 40 years ago, a family would have 20 acres of raisins or citrus or table grapes, and they'd make a living for, 6 family members, have a little house, so they have 18 acres of vines, little house, little barn, and they would make a living on that. And, these people are now, the average farmer, I don't know the exact, age, but I would say the average farmer in our target market is probably 75 to 80 years old now. Some ways everybody is, after the war, this area took off, the country grew, we provided food for most of America. And it was the heyday of, ag here for individual farmers. So when you think about it, their kids have got educated. Nobody wants to come back and work on a little farm anymore. So we've all been kind of aggregating these ranches over time. So in this Oasis area, there's lots of these. And I bought a lot of these over, and basically they're crops that are underperforming. They're old, they haven't been kept up, they don't spend the money because they don't have the money, they don't have the liquidity to do it. And you need economies of scale to make this stuff work now. You just can't do it as a lone wolf very effectively. You got to buy chemicals in bulk. You need the packing houses. If you're little, doesn't pay attention to you. It's a very hard thing to do. And, so, I mean, that is a target rich environment for us. There's going to be plenty of people that are going to want to get out of this space. We have a really great team that we can analyze the property, understand what crops should go there, and get it in the ground fast. Some people have done a little bit of redevelopment, which is our real target market for us. It was half done and half undone, and we could pay a price for half. Then our cash flow comes faster and the returns are higher in the short term. But, all this is going to work really well just because the returns are going to get higher and the values are going to get higher, and the returns driven to the investors are going to be really good, 10 years from now when we get done with us.
And this is what you might describe as value add farming, isn't it?
Well, I mean, I think it's more like, we have a thesis on the target, what the target we want to hit and where we think it's going. We just need to do value add on the properties that need to be renovated or upgraded, whatever you want to call it.
Mm-hmm.
And we've got to be able to make the most money possible, which we, as a vertically integrated company, we have a little bit more ability to do that, because all that drives returns to investors. We want happy investors because we're going to be investing. So we all want to be happy and, and have this thing, really turn out well. And I believe we're at a critical moment. The Sigma thing is happening. I mean, these ranches are going to skyrocket in value in the next 10 years, in my opinion. I'm not going to debate what skyrocketing means, but it's going to get a lot better. People are talking about this, but there aren't a lot of people that want to go out and do 20-acre ranches and do 100 of them, right? We do. No ranch is too small. As long as the soil's really good, the water's really good, the proximity is good, we're going to do it. I don't care if it's 5 acres, we're going to do it. And we have the ability and the team to do that. We're very efficient.
Now, when you say nobody wants to do these redevelopments, you're talking about institutions, aren't you? Tell me about the impact of institutions now starting to come into the Central Valley and look at and farm. What's your experience been of these investors coming in?
I mean, investors have been coming for years, or boom and bust. It's a different thing now, though. Investors are bigger and more sophisticated. And, you know, 20 years ago, people tried to do it, but they were hacks. They didn't really know. They just had money and didn't know what they were doing. And they basically went broke. Nowadays, there's private equity, sophisticated private equity. All the big insurance companies are in the space. You know, there's hedge fund guys looking at it. I used to do those businesses, so I know some of these people. They see very high cap rate returns, you know, in the market today with what we do, and they're thinking cap rate compression. And they're saying, okay, we buy this, we improve it, we get cap rate compression. We just made 100 IRR, and that's what we like to do. That's how they make money.
Isn't that crazy? I mean, let's talk about that for a minute. When you talk about very high cap rates, let's just think we're talking to folk that are listening to this podcast are used to sub 4, right? Multifamily cap rates. Those probably going up at the moment. What kind of cap rate? We're talking like mid-teen cap rate, mid-teen and higher cap rates. So talk about the numbers of what a farm looks like. Give me some kind of example.
I mean, first of all, ranches here, farms trade by the acre.
Right.
No one thinks about what the return is. I mean, we all think about the return when we're starting to think how much money we can make. But we talk about buying a ranch from someone, we say, we'll give you $25,000 an acre. We're not going to, you know, we're not saying, well, how about an 8 cap rate? Or, you know, nothing here works that way. The new investors coming in, the sophisticated investors coming in, they're starting to buy that way a little bit. It's happening. You know, or they're thinking long term of what the cap rate is and what it could be. That will drive value, the value proposition that we're selling in our program. But, you know, for instance, we did a deal 8 years ago, and we had a fortuitous buy on it, which doesn't really matter, but we had $2 million in the deal, and you know we didn't make anything for 3 years, and then we made $1 million a year for 3 years. So, I mean, the cap rate was, you know, 100. I mean, it was giant, you know, but nobody cares, right? I mean, we ended up selling it for a very high number to Prudential. It was part of one of our fund things that we did. And the term of the fund ended after 10 years and we needed to liquidate. So it was a really happy liquidation day. But I mean, you know, if on a cap rate basis, I mean, it's like 30 or something. You know, when you think about making $1 million on something, you're in $1.2 million. Or, you know, it's 100% cap rate, I guess. You know, I never thought about that.
I know that's what I mean. These are just.
But that was a very, very, very fortuitous deal. But I mean, there's plenty of. I have a ranch that we bought in 2006, and you know the numbers are smaller back then. But I mean, it didn't matter, right? We were making 50% on the equity each year for the first 3 or 4 years, and it went up from there a little bit. So if you look at today values, it's still a 15 cap rate, right? And I mean, and this is way more predictable than people think it is. People think about farming. Oh my God, it's going to snow, lightning, hurricanes, locust. I mean, we have crop insurance on everything we do. So we have crop insurance. All your farming money comes back to you. You never get in a hole if you have a bad year. I mean, we've had years where it froze. We lost half the crop. So, I mean, it's more. But the impact,
let me just jump in there. But when the impact is, so you lose half, you get some insurance, which covers your expenses, but the value of the remaining crop that you can sell goes up, right? So you make money even during those years.
Yeah. I mean, most freezes, unless it's a wipeout, we usually make more money. I mean, it's counterintuitive in a way. Mm-hmm. But I mean, if we could have a 30% freeze every year, we would take it. That's what we make the most. It's hard on the trees and vines, but I mean, we make the most money then. And I think that this water phenomenon that's going to constrict the supply of ag in the Central Valley is going to be like a freeze every year. It's going to be those kind of numbers going forward. So anyway.
Yeah. So let's talk about deal structure. You've decided to go ahead and to start crowdfunding. Your background is to have raised money. You used your own money. You've raised money from a small group of private investors. You're now looking at going to accredited investors, the individual investors, much wider. Tell me something about why you're doing that, what your thinking is, and what's the objective to that?
Well, I mean, part of it's just I love what I do and I want to keep doing it. Most of my investors and friends are older than me. And like they tell me all the time, we're not buying any green bananas anymore. So, they're saying, they want cash and they want securities where they can get the money out quick. I mean, this is a 10-year deal.
Mm-hmm.
So, 8 to 12, 10, whatever, I mean, to get the kind of value extraction that I'm looking for myself and the investor. So, and in the past, I didn't have a huge stable. I had a lot of good investors that invested time and time again, but I want to put $100 million in the Oasis in the next 7 years minimum. So I need more investors. I need more of them. I want, and I also, I love this business. I love it. I mean, I've been doing it. I've done a lot of different things. This is my favorite thing I've done in my life. I really enjoy it. I enjoy my company and my people that work for me here. And I'm kind of a people person. So, well, the investors I do have are more friends now than they are investors. So, to really, I want to turn this more into a business on the investing side. I want to put a platform up that we can deliver real service and value to our investors and get, I mean, our minimum investment is 25,000, I want to have thousands of investors. Mm-hmm. And then as we have more opportunities that come, they can pick and choose what they like and don't like. But, I mean, if we do this right, well, everybody will be happy and it'll be a pretty significant payday in the end, I think. So, and a lot of my investors are going to do this. The individuals will probably try it, but I mean, they're literally in their 70s and 80s, a lot of these people that have done this with me in the past. So, so I'm just looking to the future. And I think this is, a really great way to educate people and bring them into something they have you can't get this. I mean, it's not available. So, I mean, there's a lot of other crowdfunding sites that do agriculture. They don't own any agriculture. They don't farm anything. Mm-hmm. They just raise money and have a sponsor they barely know kind of doing this. And they're all professional, good companies. But I think we have an edge. I think that we, in a vertical situation like this, our fees are less, our focus is more, we're investing 10 to 15% in every deal, which would be real money. I just think, we have a formula that can really win for everybody.
Yeah. And you've also put together a very investor-friendly deal structure, haven't you? Tell me something about your deal structure.
Well, I mean, always in my past, I've always had smaller fees. I'm not trying to make money on fees. I'm not trying to make money on that kind of thing. I just need to hire the best people to do the job, right? I mean, my thing is, I think of it as these are my farms too. That's how when I go out, they're my farms. I treat them like my children. I mean, that's what I do. And, so the idea of making a little extra money, charging a little extra fees, it hurts the deal. It hurts the returns. But it's not good. So what I decided is, we're going to have an 8% pref, and the investors get 8% pref on their money. Then they get all their money back. So before I get a dime, they get all their money back in 8%. Then we're going to go 70-30. And after they get double their money back, we're going to go 50-50. So, I mean, to me, you're on the house's money, you've got a good 8% in this market. For the foreseeable future is great. I think you're going to be in the mid-teens probably at a minimum level if we execute well. I mean, we've had some dislocation the last couple of years when the Trump administration put the tariffs on, because of trade embargo that the Chinese were not playing fairly with us. Mm-hmm. That really hurt the ag space for us shipping to China, which was an unintended consequence of the deal, but it hurt us a little bit. So things it hasn't broke our back or anything, but it made it tougher for a couple of years. So I'm not saying every year will be perfect, but I mean, I think over the 10-year horizon that we're talking about, we'll have plenty of great years, a few okay years, maybe one bad year, freeze or rain or something happens, but it'll be, a very sound programmatic investment that we can count on.
Yeah, and what I like about the structure that you're proposing is that you're going to give investors your priority is to first pay them their pref and then return their entirety of their investment and then double it. And then even after that, continue splitting profits with investors. And it's like you get to the point where investors have a zero risk investment.
Well, I mean, the thing about it is, I mean, people work hard for their money, right? I mean, if it doesn't work really well, I don't want anything. I don't deserve. I'm going to have 10, 15% of them. I have a bunch of money in this, and I'll get my money back and 8% prep also. But I mean, I don't want to work for free either. So if it gets really good, I want a payday too. But but I mean, if you're not delivering more than 8% and your money back, you don't really deserve anything in my mind. I mean, plenty of people are much better deals than that. I mean, we have no acquisition fee, we have no disposition fee. Right. We want to make it on the ranch. How much we want to make it when the investors make it and the ranch pays back. So, and I have confidence we can do this. I've been doing it for 20 years. I mean, we've performed and we've had good years and bad years, but here's the thing. One really good year, you can get half the money back on the equity. I mean, it takes something, the stars got to align, but I've had years where we've made huge amounts of money on different properties because everything lined up and we had we had this peach, we had some peaches on the first property we're offering. We had one year where we got 2,000 boxes an acre and they're all giant. And, we made so much money that year that it was like 25% of the entire capitalization of the ranch on one part of it. God. So, I mean, really good things can happen, even if we don't have the Oasis effect and cap rates don't compress. You still can make a lot of money at this relatively to other things.
Yeah. I mean, I grew up in a country where the wealthiest people were the gentleman farmers, right? The ones that owned huge tracts of land in England and farmed. It was always quite a romantic kind of livelihood to me, but it's the first time I've heard of it in the US.
Adam, the other thing that's proved out in my life, right? I mean, I started this because it was an opportunity to buy cheap, right? And then fell in love with it, right? So, but I mean, if you look at my net worth as a person, the first ranches I bought 25 years ago I bought them for like $1,000 an acre. And then 4 years later, I got some more money and more investors, and we bought the next ranches at $5,000 an acre, and then $9,000 an acre, and then $14,000. Those ranches are now $40,000 to $50,000 in the good areas. So this investment we're talking about, we're going to make so much a year, but the land at a minimum is going to go up 2 to 4% a year. So I mean, if you're a middle-aged person thinking of retirement, if you're a young person thinking about raising your family, I mean, I can't promise people things, but I would bet a lot that we're going to continue to get 2 to 4% no matter what. And we're going to make 5 to 10% minimum on these ranches once they're fully producing. If we get to redevelop, it takes a couple of years to get going. But I really believe you're looking at 10 to 15%. It's a no-brainer almost, right? Compared to the rest of the world. And these are low leveraged at under 50% roughly. I mean, as hard as I've tried, I can't lose a ranch no matter what happens. I mean, I've tried, we've had bad things happen, but I mean, this is a safe investment on top of everything else. These ranches don't go down in value much. They ebb and flow a little tiny bit, but I mean, you can't lose your money that I've ever seen. The only way you can lose it if you highly leverage 80, 90%, and banks don't even do that anymore.
Right.
So, I mean, it's a pretty good bet, I think, in the world we live in. Real assets. I mean, I only do real assets. I don't invest in the stock market. I grew up in New Jersey during the penny stock craze. All my friends worked on Wall Street and stole everybody's money. And, so I just don't, I mean, it's great for a lot of people, but I only buy real assets. We buy rental houses a little bit. We have some little apartments. I mean, that's what I do. So I'm a big believer in this as far as at the end of the day, I want something. If I can only get $10 a month, I still want my $10 a month in a crisis. I've had a little house or something. So,
George, it's a lovely story, and I'm totally sold on this story. As you know, let's wrap up with 3 quick fire questions.
Okay,
if I may. So the first of those 3 questions is: what are your daily habits that keep you successful and productive?
I'm a hands-on kind of guy, and I'm a people person pretty much. So, generally I go to all the ranches every week. And especially like this morning, we're packing some table grapes this morning, 3 varieties. I was there this morning when they started, and when the owner guy, I'm not a condescending thinker. So, I don't think of myself as the patron walking around, but the packers think of me that way. So, being there, just the simplest observations make money, right? I'm more of a bigger picture guy, because people, when you're focused on harvesting, estimating, packing, it's a very intense thing. So the people that work for me that do this, my general observation sometimes really helps out. So, the fact that I like being part of it, and, and I like to be there, and I go to all the ranches every week. We're always doing a little better because of that.
Second question. So what's been the hardest lesson you've learned in real estate throughout your career?
My overall real estate career?
Yeah. What's been the hardest lesson? Huh?
The hardest lesson for me is the things that I sold that were almost idiotic when I look back at it. I had an apartment deal in Costa Mesa, California. We bought it for $13 million. I owned about half of this thing. Bought it for $13 million, sold it for $18 million a year later. Told my wife what a genius I am. And the next guy sold it for $100 million 2 years later. My wife said, "You sure are a genius." So, and that happens. That could happen. You don't go broke putting up 500,000 to make $8 million. That was pretty good. But I've just learned to be more thoughtful and think deeper about what could happen. What should we really do? What strategically should we do? Because in those days, I was like a hired gun running around buying stuff and flipping stuff. That's how I got going in my career after private equity. So, hard lesson. I drive by this thing all the time and I see it. That makes me crazy. So,
all right. So last of the quick fire questions. Somebody who is considering investing with Bravante Farm Capital in crowdfunding one of these ranches that you've got lined up for the rest of the year, what advice would you give to somebody who is thinking about doing that, but really has no clue about, investing in farms, right? It's an unusual thing to invest in.
My only advice would be simple in a way. I think everybody should have a little bit of what they have in the agricultural space in general, whether it's with me or somebody else. So, especially if you're in 20, 30, 40, 50 years old and you got a 20-year runway to make your life work. So, I think that first of all, I would recommend that, because I've just seen people do well. And I think that, we're a group that you can kind of count on not to steal your money and to treat you right. So whether you do it with us or someone else, make sure you're doing it with somebody that's of high integrity and you're sure is going to do you right, because you can take advantage every step of the way in this business. You can pick it and get a kickback from the picking crew. You can take it to a packing house and get a kickback from the packing house. There's all kinds of ways money disappears. In our program, it's tight. That money goes to the investors. We don't need to take advantage of it. We're already doing this, and our big payday comes when we give all the money back and all the preferred return back, and we sell it for a huge number later. That's where we make the money. So anyway, so that's, other than that, I also think real assets are the place to be. Inflation's here, probably going to stay here for a long time. And Americans got to eat. So things we make, they want, and this inflation thing is tough right now for everybody. We're having trouble with our costs right now a little bit. Shipping back east is expensive. Shipping it overseas is expensive. So our margins aren't quite as good as they used to be. But that'll change and come back, and these values are going to go up regardless. The ranches are going to become more valuable, and the payday and the annual income is going to go up as things compress. So that's all I would say about that.
George Bravante, Bravante Farm Capital. You did say it's been good working with me for 2 months. I'm so glad it only seems like 2 months. Actually, in 6 months, we've been working together. So I'm glad it seems like it's gone by so quickly. It's an enormous pleasure getting to know you. Thank you so much for being on the podcast.
Okay. Thank you for all your time. See you, Adam. Take care.
That was George Bravante of Bravante Farm Capital. It is a fascinating opportunity. I bet you've never heard anything quite like that. Before, I certainly hadn't. And I found it interesting enough that I decided to invest myself and to join George's team to assist in raising capital for him. If you did enjoy the podcast and would like to learn more, please go to the podcast page at gowercrowd.com, where you'll find a link to a detailed presentation that runs through the entire investment thesis and gives you the opportunity to join the waitlist for George's next deal. That's it for today. Thank you for joining me, George. It's been a pleasure getting to know you and to learning about farming, and I am looking forward to working together with you on financing these farms. And thank you too, dear listener, for listening in. That's it for today. Be well, stay safe, and for now, this is Adam Gower signing off.